Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash. For those of you who've been with us before, welcome back. And for those of you who are brand new, we welcome you. And today we're going to be talking actually about gold. I have my co-host Chris Agelastos with me here. And we've been talking about gold for quite a while. Swiss America Trading, we're a company that's been in the metals business for 43 years now, I believe it is, Chris.
Yeah.
Personally, I haven't been there that long because with this young face, I've been there. This is my 33rd year now. So, nonetheless, I've been doing it a while, been watching a lot of things take place in the gold market, good and bad over the course of the last 3 decades plus that I've been doing this. But I'll tell you what, recently, what we've been seeing, this has been it's been a roller coaster, but it's been a roller coaster that's been on a straight climb, actually. So I don't even know if a roller coaster would probably be the right term. The roller coaster, I think, is more relevant to what's happening in the world economy right now, and what's happening with gold prices has been about as steady as could be. And so,
Yeah.
Chris, as we're looking here at this Watcher.guru article, uh, entitled Gold Climbs to $3,719 an ounce and delivers a 42% return in a year. That's
Yep.
outstanding. I don't care where you've got your money invested. That is an outstanding return.
For sure.
And I know we've discussed this in other podcasts, but as you look at this, and we've discussed how, some of the, I would say at this juncture, even conservative estimates or projections for gold prices by year's end are 4,000, mid fours in some cases, some people even as much as five plus. Suffice it to say, it seems pretty realistic or reasonable to believe that it is going to be going up throughout the rest of this year. And understand too, Chris, when we talk about $4,000 an ounce gold by year's end, we're literally right on the cusp of being in the fourth quarter of this year. So you're talking, the basically a $300 appreciation just at that 4,000 mark in the course
Yep.
of 3 months. And you'd be looking at just shy of another basically 10% appreciation by year's end. So
Mhm.
looking at all of this, and we'll talk a little bit, about what has been happening in the gold market to cause this. But as you're dealing day to day with clients and individuals who have questions about gold, who are contemplating getting into the gold marketplace, not everyone's getting in that you talk to. And why? What do you think is holding people back from getting in right now?
There's a number of things. I think for some people, if it's new to them, sometimes they're just nervous about doing anything. There are some people out there that just any sort of decision that they have to make maybe paralyzes them a little bit. Now I find that most people with that condition, if you give them enough knowledge and education on precious metals and the benefits, make sure that they're holding it for the right time period, then you can usually overcome those things. And again, we're not typically talking to people that just want to buy some gold and hold it for the next 6 months or a year and make a quick profit. Even though obviously, they would have made 40 some percent this year so far. That's not typically what we preach. I mean, we're talking to people that want to protect their savings for the long term, have something that's physical and stable, and that has a long track record, thousands of years, at least in our monetary system. And so with those types of people, once they understand those things, usually they'll get in. But I think sometimes too, people worry, anytime something has gone up, they worry, well, is this the top? I don't want to get in at the top. But at the same time, if they're holding gold for 3 to 5 years, or even 5 to 7 or to 15, and a lot of our clients, maybe even 15, 20 years plus, they just figure, they're going to hold on to this and maybe hand it down to their kids if they don't need it. And if a rainy day comes, at least it will be there for them to cash out. But if you're holding long term like that, you really don't have to worry about buying at the top, because it's always gone on to beat its previous high. So it's unlike a stock where a company can hit a high and then go out of business, right? Or be bought up by somebody else, and all of a sudden now the share price can plummet, and maybe never regain even close to its highs. And we kind of saw that with Intel Interestingly enough, if you bought Intel around 2000 or 2005, you are just now kind of getting even to where it was back then. There was a long period of decline, but we've never seen that happen with gold. So I think sometimes because people are used to seeing the stock market and all the news on that here in the United States, they sometimes equate those risks with physical metal, and that just doesn't exist in our industry.
Well, and you and I have discussed this before, where, by and large, the majority of people that you deal with or that you're talking to, the main motivation they have for getting into gold is more protectionary in nature. Meaning,
Right.
perhaps some of these things that we're hearing about with a US dollar crash slash collapse could occur. We've already seen banking crises of sorts where
Hmm.
various banks have closed their doors for a period. Some of them have, or people. What about people who have just flat out had monies taken from their bank account and
Yeah.
no explanation given, et cetera? So there's a lot of protectionary side of this, but the benefit has been for those who have positioned to be protected. They have taken advantage of some great profits and some great
Hmm.
gains as well, and that's been vitally important, as we've talked as well about. It's been vitally important due to the fact that we have pretty strong price inflation in our grocery stores, at our gas pumps, our uh, energy costs for our homes, et cetera. That with that appreciation, that that 42%, like for instance, that we've seen in
Hmm.
gold this year, that's helped people counterbalance that. And so, for those of
Yeah.
you tuning in, if you want to learn more about gold, actually, before we get into our second article here, just want to let you know you can contact our office. You can phone us at 1-800-289-2646, or you can also text us at that 1-800-289-2646, and we'd be happy to get you out some information. You can visit it. I don't know why that's tough for me to say every time, Chris. Visit us online at SwissAmerica.com. It's SWISS America, all one word.com. So, looking at the second article, we'll get into a little bit about what's been taking shape lately, and what's kind of fueling some of these increases in gold. Gold prices hit new record as hopes of more Fed rate cuts spur demand. Well, gold prices a little spike here because the Fed did just have a little bit of a rate cut, and we're
Mhm.
told there's going to be two more rate cuts throughout the course of this year, and it could be more. Maybe it
Yeah.
could be less, but I think it's pretty safe to say, and Wall Street is kind of banking on the fact there's going to be more. But with this being said, if somebody's sitting on the fence and they're saying, well, maybe gold's reached its peak this year, maybe they're right, it's going to 4 grand, maybe they're not right, it's going to 4 grand. The bottom line is that in so much as that the market has pretty well by performance stated loud and clear that with these rate cuts we expect to see increases in gold. This is the reason, or just one of yet many reasons, but a person should be getting into gold today. Correct, Chris?
Yeah, it's still a very safe time to get into gold. I mean, some of the big things you mentioned already, obviously the rate cuts, but we also have continued central bank buying. Obviously, there's still a lot of geopolitical tensions around the world. Yeah, unfortunately, that seems like it's never going away at this point. Rising government debt. And just a whole lot of economic uncertainty in general. So those are all things that are pushing higher precious metal prices. So I don't think people really need to worry about, if I get in now, is it going to continue going? The question is, how much more is it going to go? But even at a conservative rate, all these banks and investment firms are predicting, excuse me, $4,000 to $5,000 gold this next year. So where we are now in the $3,700 range, still plenty of room. And again, you're buying it. I always tell people, buy it for the right reasons. Buy it for the protection, the safety, the returns that you get from it. That's the gravy. Those are the extra things. So if you can have a little bit of all of those, and the physical aspect of the metal to protect a good piece of your portfolio, I think it's a win-win.
And yeah, I totally agree. And again, can't urge you enough for those of you tuning in. If you have not contacted us to get some information on that, it's free information. The education will be invaluable to you if you're not already involved in gold, and even if you are currently involved in gold, there are some things in there that may actually open your eyes to some different opportunities, et cetera. So Thank you for all that, Chris. And for those of you
Yeah.
tuned in, we thank you again for doing so. We look forward to talking to you more in the future. If you're not following us on social media, please do that as well, as you'll see the links here in the show description. We'll talk to you soon. Have a great rest of your day and a great rest of your week.
Thanks. Take care.